Hey everyone, welcome to this week's Finquinity podcast. Let's start with talking about the continued selling of the market this week.
It all started with the government shutdown. Last week's podcast, we talked about how the Senate bill was passed. And then we had Thursday, we had Donald Trump sign the bill officially. And so the government shutdown is ending. And, unlike it being a bullish event, it ended up being a bearish event because the market is now quite worried about the data. Um, whereas, previously the idea was, hey, the government shutdown happens, there's more certainty, and that extra certainty would be a driving factor for stability or growth. But in fact, we saw kind of the opposite effect where, despite the extra certainty that came from the government shutdown, there became more uncertainty as people await now the upcoming data. Looking at the calendar, um, there actually isn't too much data, so I'm a little bit surprised on what the government is kind of worried about. Obviously there are the FOMC minutes, but the FOMC did hadn't had government data for a while. The next official data is coming in end of November with PCE, personal income, durable goods, GDP growth. And that'll be a pretty big one, but nothing short term. So I was kind of curious. I want to hear your take on why we're seeing such a bearish response for a supposed bullish event.
Yeah, I think a lot of this has to do with the bubble that is, popping now. So there has been a lot of fear with AI being very overvalued, and looking at specific companies like Meta, you can kind of see where that logic is coming from.
Hmm.
Meta, back in 2022 was getting attacked, right? Because they were announcing, $10 billion a year spending on the metaverse, which is complete like nonsense.
Yeah,
In hindsight, it didn't really work.
yeah.
And this year, after this earnings call, they announced that they were planning to spend 70 to $80 billion a year on capex, capital expenditures.
Yeah.
So, you know, what does that mean? It means that there's this fear that a lot of this spending is not realizing profits. It may not give them the return on investment, and a lot of uh, investors are basically saying, "Is this the metaverse?" Right? And this now extend that thinking to all the AI companies, especially companies that are not profitable. Meta is shitting the bed and is profitable, very profitable.
Hmm.
But you have companies like IONQ, right? Or Qubit, for example, quantum computers, or like
Hmm.
other hype stocks that make $0 whatsoever. OKLO is another one.
Hmm.
They make $0, negative dollars actually. They're burning cash, and their valuations are have been going up over the last couple of months. Right? This isn't normal. This is hype, right? And we even see it on Anchor, where it doesn't even respect Anchor system when it was bullish.
Yeah,
It
it
was
was.
it was in zone 2. Like I would
Mhm.
even argue maybe it's in zone 3.
Yeah, yeah. The hidden secret zone 3.
Right. So basically, what I'm trying to say is, I think that some realism is being driven back into the markets, and this is a good thing. You know, I've considered moving capital back into my account now rather than staying in cash, and I'm starting to eye certain positions that I may want in long term. So, some of the positions that we've currently been discussing before this podcast began was Bitcoin, right?
Mm.
So let's take a look at that and see what's happening there.
Bitcoin has been like just struggling. Bitcoin, it went from the all-time highs of 126, and today it hit 95, 94.5. And so it's been on a tear. And we were discussing and we are talking about how far will Bitcoin fall And is it an asset that is reliable enough that we can buy here with a long-term investing in mind?
Yeah, yeah. So what I think is happening to Bitcoin, and if you can look at the levels, right? I never say um I never say look at the levels and buy at this level. Don't buy at 90K or buy at 80K. That's the magic level, right? Don't do that. We follow the system, but when you're in this regime when you're risk off and everything's like super bearish, you have to consider, what's your time horizon, right? When I say that I want to size in that Bitcoin, I mean to say is I want to make sure that my risk reward is favoring me. So I look at this and I'm like, okay, Bitcoin's drawing down like 25%. It's pretty, it's a lot, right? Like maybe it's bottom, maybe it hasn't. But I want to start positioning myself in case most of the drawdown has been complete. And again, no one knows
Hmm.
whether or not a drawdown is complete, but we can kind of gauge that it's how far can this go. So I look at this and I tell myself I want to probably get into some IBIT calls, something long term, like a year away. Um, there's always a chance that those calls can go to zero, right? But if if you can get more out of money calls, you're able to increase your leverage and decrease how much capital you're allocating. And because you're giving it a year for it to play itself out, even if Bitcoin doesn't reach your strike, right? You're able to still make a decent return because the market is so bearish and you're capitalizing on that opportunity. Now, is it completely systematic? Systematic? I don't think so. We're still working on that. We're still trying to build the macro filter out, right?
Hmm.
Um, but that doesn't mean you shouldn't have generational long holds. And I think this is a very good opportunity for us to start buying some of it.
I'm also not alone looking at Bitcoin. I'm also looking at other big giants, right? Microsoft, an example of something that reached an all-time high and it actually, down under like 10-15% from all-time highs. Meta is a good example of something that's down from all-time highs. Though although about Meta, I have my reservations about it. But I think we're pivoting back kind of to, what's kind of happening is I would agree with you. We're definitely in a sell the news type situation where the news has been good, traditionally good, in the sense that, hey, we're doing all this expenditure, we're thinking about our future, we're making all of these moves, but the market has been reacting unfavorably. And one thing I saw being discussed today was the rate cut. The probabilities were reduced, isn't that right?
Yeah, yeah, that's right. So there are a lot of Fed officials coming out saying that the market um, isn't probably going to get a cut soon in December because they want to be more, restrictive, more cautious on controlling inflation. Now, do I think inflation is still a problem? No, I don't think so. I think that the Fed has been too scared from the events happen over the last couple of years, such to the point that it's clouding their decision making. And every time they think of cutting, they think of the credibility that they would lose if inflation magically goes up.
Hmm.
You look at what we talked about last week, where the labor market is losing jobs, right? The government is basically paralyzed, so they can't even focus on fiscal spending to jumpstart the economy. And you have this growing AI bubble burst where a lot of investors are basically pulling capital out, wondering what's going on. Like, why are these companies burning capital, and what's the point of all this? The rate cuts could could have added a cushion to the financial markets and in some ways perked up the inflation metrics, you know, but they're not seeing it like that. When we look at inflation swaps, so let's search the two 10-year swaps.
Hmm.
Let's see what the spread is. Okay. Yeah. So when you look at this, you're basically seeing the fact that um, markets are a bit concerned that inflation is still a problem. But when you look at commodities, when you look at commodities like gas, oil, and copper, essential metals that are used for industrial production, what are they telling you? They're telling you that inflation is no longer a problem,
Hmm.
right? So I think that we're focusing on the wrong things, and unless we get bad data coming out now that the government has reopened, we won't see that confirmation. You notice that when you look at TLT has been gapping up, but then getting sold off, gapping up and then getting sold off, right? But it's not being pushed all the way down. And I think one reason that's happening is because every time the market is repricing in a cut because of bad data, the Fed is pulling back and saying, no, 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 you got it all wrong. Not like this, right? So we're experiencing this bipolar price action on bonds that I think will quickly find this direction soon once we get a bigger view of the picture.
Right. I mean, it's definitely a confusing time. Because we're constantly having to reprice everything. It feels like in the last few days, the certainty in a certain way actually has increased. If you look at the VIX, over the last events that happened during this week alone, and it does feel like we're in a actually surprisingly high volatility environment, despite things kind of panning out.
Yeah.
One thing I do want, and I'm actually quite curious about, is what are the other sectors looking like? I'm looking at the utility sector. Utilities are kind of doing fine. Now, I don't know if we talked about it in the podcast, but I remember we talked about this in person where for during the summer, the utilities were actually following the tech stocks because, there was investment in the energy sector, energy production sector. So utilities was doing a good because of that. But now, obviously, probably because that AI tech stocks aren't doing as well, utilities are also kind of moving downwards. Healthcare is what's surprising me. Is healthcare is doing really really well in this past period. Do you know why that is? I am not really sure.
I think one reason why healthcare has been doing so well is because it's a defensive, sector, right? When the world burns, people still need to go to hospitals. People still need medication, and we're seeing that reflection happening. I look at a different, defensive sector that we've often talked about, XLU, and XLU has unfortunately been taken to the woodshed because of how correlated it was to AI, right? Or it is to AI.
Hmm.
So if you think about it, if utilities, which used to be a semi risk off asset where you can actually kind of buy into it and wait for the market to blow over, that is now very risk on because it's connected to, the AI companies. The only sector left that's like tradable and still considered an equity would be healthcare. You can have all the other consumers, but healthcare is one of the things that people can't say no to,
Hmm.
right? So we're seeing lots of bids on it because there's a lot of fear in the markets. And I think that this burst we're seeing on XLV is probably due to capital rotation.
That definitely
Now,
makes sense because I
yeah,
feel like 'cause I mean I haven't checked the fear index in a while, but I do feel like the fear index got better, but it's probably gone worse. Let me have a look at the fear and greed index. Obviously, I don't think the index is always a bit delayed. Oh wow, we're still in extreme fear. Interesting. Yeah. Yeah.
always an extreme fear
Always
every
in
day.
extreme fear. Yeah.
Yeah,
Yeah. 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 I just feel
yeah,
like the market has been really like weak in the sense that it doesn't seem to have as much support anymore for moving in any direction. It's not necessarily mean reverting, but it's stagnating. It's unsure what direction. And to top it off, it feels like generally you had an index of the NASDAQ, and the NASDAQ was moving in one direction. But now it feels like even the NASDAQ, it's moving in different directions because the individual equities inside the NASDAQ are all moving in separate directions.
Yeah. Yeah, yeah. There's definitely some sort of distance between the mega caps and the other companies, right? Keep in mind that the biggest issue we had over the last couple of years in investing and in the markets is this hyper concentration of capital. You have everyone just passively buying ETFs and not knowing like what companies are getting into. But the only companies that have the biggest weighting in these indexes were the Magnificent Sevens and the other tech companies, right? So now that these companies, even though their earnings are very well, their earnings are very good, um, that fear that was first conditioned in the shit companies that make no money, it's now spreading to conventionally risk on assets like like the tech companies. So I think this is gonna die down. Every time this gauge where it's extreme fear, everyone's saying it's over, everything's in shambles, it's definitely gonna rebalance out. Now, is it gonna be bullish again? One day, not probably now, not today, but but I think realistically, for people who just want to find opportunity to buy in and not look back, this is fine. This is great. Okay, like certain companies are already in correction territory or in bear market territory. Meta is one of them. QQ is not. It's getting close to correction,
Mhm.
right? Not there yet. It's getting close to the 10% drawdown for all time highs. There's probably still more room to run, but the market still looks pretty healthy. This is a healthy pullback. S&P is only down like 3.5%. That's not a lot,
Mhm.
right? We're not like in recession or anything like that. There's been several years now of this news of saying recession is like around the corner, but we've seen a lot of bad price action over the last couple of years, and we've survived that. So I doubt this fear of the AI train bursting is going to be anything worse than what we've seen so far. The only thing that is on top of my mind right now is using signals to help us avoid drawdowns.
Yeah,
Yeah.
that's basically it. There's a lot of volatility. I mean, one thing I do want to say is that I think since the last video, I was actually looking at that while we're talking, is that in the last video we looked at the Nasdaq forward curve, and the forward curve actually was showing a slightly pessimistic mid 2026, but now that curve has kind of smoothed out to be a gradual but continuous upward direction as it normally is. So, despite what is happening in the short term, the medium to long term predictions are still indicating towards a positive trend. And
Yeah.
so I think we're fine. We're definitely fine in the sense that, long term things are okay. But it's just that it feels like there are a lot of opportunities in the market that are actually feeling hard to predict, that are feeling hard to capitalize as well. And it's kind of the place where what is the next direction feels like it would be a good time to start thinking about now. Because
Mhm.
for example, I throw a Bitcoin, right? Bitcoin can be this once, in a few years, once in a blue moon opportunity to buy at the, buy at the bottom or near the bottom, and just keep sizing in until,
Yeah.
you hit that bottom. So I don't know. Like, what do you think? What are the next moves? What are the things that are really happening? I feel like December is going to be a slow month. It typically tends to
This
be.
December is gonna be people seeing therapy, and basically saying that they made a mistake buying into November, right? Um,
Well,
That's what I think December is
that's
gonna be.
December, the profit-taking month. Everyone books profit and losses. To be fair, um, for their
Well, who
balance
knows?
books.
At this pace, you don't need to harvest tax losses.
To be
You
fair,
know,
people
because
people
it
have been
balances
holding
out.
since January, and those guys have been rewarded in a certain sense. Now,
Absolutely, yeah. No, I definitely agree with that.
yeah.
Another thing that I recommend is that if you are longing stocks, right? And I know some people who are, they have a big position, some company that makes no money or whatsoever, and you're holding the bag right now. Honestly, just try to like maybe sell cover calls on those to reduce your cost average. I know that some people don't like that because the risk is I'm going to give away my shares at a cost that's far lower than mine. I'm like, well, yes, yeah, that's all that might happen, right? But you also have to consider what are the odds of that happening, right? If you're buying something like IONQ, yeah, maybe the odds are high because this thing can go up like 10% in one day. But if you're bag holding a stock like Meta, for example, or Google, I doubt it's gonna like go up that much in a week or two. And you can definitely sell some calls to reduce your cost average because you're gonna hold them anyways.
Yeah, we're definitely going to
Yeah,
probably talk a lot about strategies to manage
yeah,
your singular position. Actually, in the world of options and
yeah.
other options, there's so many things you can do.
And yeah, and to be frank, we're building that strategy out right now, right? Like
Hmm.
we're testing some stuff. We're not super active on Twitter anymore because we've been we've been hibernating, to be frank. And the market is just bearish. So we're not super active in making moves. And rather than forcing a trade, we're just basically shorting covered calls on things that we are currently holding, but also trying to develop new strategies and do more research to figure out what's the best what are the best methods to earn more returns, right?
Hmm.
We're not going to go full degen and start buying something that's complete garbage, but I think options has a very is very flexible in allowing us to develop strategies that can capture um, dollars from the volatility that we're seeing.
One thing I always like to say is like we have to look at the extreme value theory in the world of trading, where if you consider the fact that hey, 90% of the time, 95% of the time, the market is going to behave this way, and we ignore that 5%, well, you're going to be you're going to lose. And when you lose, you'll lose big. You might wipe yourself out. And
Yeah,
so we're currently in a environment where we have to really value this risk. Now when we say bearish trend, bearish regime, it might not feel like it. Hey, you might even say, hey, look, since October, since November, NASDAQ has actually hit all-time highs and is still hovering near the highs. We're doing like a couple percent of the highs. And that's true, but where that doesn't mean like the bearish regime is not there, because the environment
mm,
has become more volatile. The environment has
yeah,
become more unpredictable, and the environment is feeling like that 5% chance of an extreme event happening has gone up to a 10.
yeah,
And so we're definitely in a mode of, as opposed to taking risk as before, we're in the mode of capital preservation and
yeah.
obviously some growth where we can find it. But we're not, I think, at the moment aggressively deploying,
No, we're
80% of
not.
our capital for trades. No, I think that was me
Yeah,
in the summer, but now I'm like mostly in cash, a little bit here and there, and a few
yeah,
things,
that's right.
and I think that's how it should be for now. Though,
Yeah.
yeah, I don't know. I feel like the GDP growth is going to come out weaker this quarter. Do you know what the expectations are? Um,
No, I have not kept up to it yet, just because the government was shut down and has recently reopened.
mhm. Oh,
Um,
I'm looking at the expectations on TradingView. The
yeah.
forecast is 3% from
Oh, I see.
down from 3.8 from the previous quarter.
Okay.
Very interesting. Very interesting.
Yeah, like I like as I reiterate, right? I think the inflation fear is over.
Yeah.
Um, this tariff stuff, it's old news now. The market has already digested this. It's been a year, and so far what we understand is that Trump will not use tariffs in the way that we fear, that the market priced in like in April.
Mm-hmm.
It's not that bad.
Yeah.
Right. And he threatens tariffs on China once in a while, but so far he finds reasons to de-escalate, which is great for us. So again, just basically fade his dips. Anytime that's any dips that are Trump driven, just fade it and just buy in. Honestly.
Yeah, might be a strat.
Yeah.
Someone should backtest it.
Yeah.
Find out how profitable that might be.
Yeah. But I think we can wrap it up today.
Yeah, I think we spoke about a few of the interesting topics. Kind of a slow week, kind of a week where, I mean, to be fair, we did have our podcast on basically Monday, which we released on Tuesday. So it's only been like a couple, 4 or 5 days, 4 days, Friday today, since we really had an update. So short discussion point, more about just, general trading. And let us know if that's something you're more interested in, about the general trading strategies, just advice on that. Or would you care more about, evolving news of the market and so on? Thank you so much for watching. Thank you. Bye-bye.
Okay. All right. That's right. Bye-bye.